I tracked where the housing market is currently collapsing. Check this out. From a zip code level look, if we go down to a place like Atlanta, Georgia, 30311 in Atlanta, Georgia, prices down 7.5% year over year. And what's more is that prices have been falling there in Atlanta for months and months. In fact, if I take a look at prices, home prices there since 2022, you can see something really crazy, folks. Look at this. Since 2022, prices in that zip code, 30311 in Atlanta, Georgia, down 20%. But that's not all. If I go to a zip code like 02466, that's actually in Boston. Yeah, Boston. Look at this. Prices down 6% year over year. And they've been falling for months as well inside Boston. And this is a pretty expensive area. So look at this, down 10% since 2022. That's deflation, folks. Prices are deflating in these zip codes. Now, let's go to another zip code. Look at this one. This one's in my state, Ohio. This is a Cleveland zip code, 44108. Prices down 11% in this Cleveland zip code. And one more, let me show you this one. We go to La La Land. Actually, this is Orange County, California, Irvine. Prices down 4.6% in Irvine, California, just south of Los Angeles. So what does this mean? Well, quite frankly, it's telling me that if you look at a zip code level rather than a national level, because there really is no national housing market, it's really about your housing market, that's where you're going to find the truth about the housing market, right? At a zip code level. So the question is your market one of the ones that's falling, that's collapsing and deflating? That's what we're going to look at today on The Housing Nerd. Welcome. My name is Jason Ferrier. I am the Housing Nerd. I'm a realtor, investor in Ohio, and been doing this going on nearly 10 years now. So I know something about real estate, and I'm here to help you understand what's happening nationally, but more important in your market. So drop your zip code below, and I will examine it today. It's great to see you this morning. It's a beautiful day in Central Ohio, and let's learn about some real estate. So go ahead and start dropping your zip codes below, and I will examine them in a minute. First, though, I'll go through just an overview of the national market, and then we'll dive into those particular zip codes. So this article, I'll share this, and I'll drop it in the link below. But this article from Resi Club Analytics, which is a fantastic website. If you're not subscribed to Resi Club, I don't know what you're doing. But it's important to know that there are 68 major metros across the U.S. with falling home prices. So if you look at 300 cities across the U.S., this is where prices are falling. And notice what's really happening, right? You can see that it's really, honestly, it's the, Sun Belt, the Texas markets out in Colorado, down in the Southwest, and up in the Northwest is where we're seeing falling prices. And it's 68 major housing markets with year-over-year home price decline. And this is the important part, 232 posting mild gains. So the weird thing is right now we're seeing home prices, when you look across the country, there are only 68 markets of the top 300 where prices are falling, 232 going up. So a lot more going up than coming down. The thing is, the ones that are going up are barely going up in most cases. So this chart down here at the bottom really helps us understand what's happening. So look at this. Housing markets where home prices are falling year over year. So the biggest one is in Kentucky, London, Kentucky. I'm not sure what's going on there, but prices plummeting there. Then you got the normal suspects, Punta Gorda, Florida, Austin, Cape Coral, Northport. You got a Hawaii location in here, Marco Island, Asheville, North Carolina. That's on this list now as a falling market. Las Vegas. You got a Stockton, California location there. So not, one of the things that I noticed immediately from this list of where the markets are the worst, where the home prices are collapsing, is that it's no longer just Florida and Texas. In fact, some markets in Florida that you'll see here in a minute are actually going up all of a sudden. But there's a lot of other markets here like Hawaii, Kentucky, North Carolina, Nevada, California are now on the top list. So that's where home prices are falling. But then if I look at where they're going up, we'll see that in a minute here. Look at this. So this is where they're going up right now. The blue. So yellow down, blue up. So you can see most of the Northeast, most of the Midwest still up in home prices. Although again, the growth is not skyrocketing. We're not seeing like overall 12%, 13%, 20% growth of home prices. We're seeing like 1, 2, 3%. So even though more markets going up than going down, a lot more going up than going down, that probably surprises you. It surprised me when I looked at it. The trend is that home price growth is slowing. Now, let's look at why that's really happening. What's going on behind the scenes? Well, one of the things we can easily take a look at here is let's look at inventory of homes for sale. Let me show you that real quick, because this is, again, if you're a data nerd like me, you're like, oh, wow, this helps you understand really what's happening. So if I look at a state level look of the U.S. and I go, all right, let me look at inventory, and I'm using Resi Club analytics for this, the Resi Club terminal, and I look at inventory year over year by state. You can see that there are a lot of states where inventory was growing or is growing right now, and it wasn't growing last year. So like Ohio is up 10% in the number of homes for sale. Inventory, supply drives everything, folks. You got a lot of supply and you don't increase sales, you're going to have falling prices. And so Ohio, we're seeing prices the growth start to come down because we're gaining inventory. And so this whole Northeast, Midwest area now gaining homes for sale. That's good. But look at this. This will shock you probably, is that Florida, pay attention to this. Look at Florida. Florida is down in inventory. The number of homes for sale in Florida is down, meaning they have fewer homes on the market than last year. And it's not just by a smidge. It's 14% down in active inventory in Florida. 14%. So Florida inventory is collapsing. You won't hear many people tell you that. Most people are going to tell you that Florida is doomed, right? I mean, it was supposed to be doomed anyway, but somebody forgot to tell the sellers because they're not putting their house on the market anymore. And look at Texas. Texas has fewer homes for sale than last year, too. Who had that on their bingo card? Not many people, probably. So you get the Midwest, Northeast growing in the number of homes for sale. You've got the Florida, which is crazy, actually losing homes on the market. Texas now reversing, losing homes on the market. Look at California. California is down in the number of homes for sale. Inventory just not materializing in Florida anymore like it did last year. In fact, there's a lot of states that are down. Montana, Idaho, look at that. Idaho's down 7% in inventory. Arizona is down. The number of homes on the market is down in Arizona, 2.5%. So, and then there are markets, like Illinois, which has been down forever, it seems like. I mean, Illinois is in the hurt locker when it comes to inventory. It's just not doing well at all. And the prices reflect that. So that's what's happening with inventory on a state level. If we look at a county level look for inventory, you can kind of see what pops in here. This, again, gives us just more of a granular look at how inventory is tracking. And looking year over year, look at Florida. I mean, you got markets like Duval County, Florida, down 20% in the number of homes for sale. Putnam County, Florida, down 8%. I mean, the list goes on and on. It's just a complete shocking turnaround from an explosion of inventory we saw last year in Florida, this year down. Nuts, right? Nuts. Now, again, go up to my area of like the Midwest, Northeast. You're seeing these markets like right here. I'll zoom in and show you. Like this market here, Delaware County, Ohio, is a major market here. And you can see we're gaining inventory, 512 listings right now. It's creeping up to a 10-year high of the number of homes for sale in Delaware County, Ohio. So Midwest is changing, adding inventory for the most part. Northeast adding inventory. But then you go out west and you see inventory falling, right? Elko, Nevada, down in inventory, down 50% year over year. You go down to Maricopa County, Arizona, where Phoenix is, down 3% in the number of homes for sale. And look how inventory was skyrocketing in Arizona, in Maricopa County. It was skyrocketing in 2022, and then it dropped off the map, right? Sellers decided not to list anymore. Then you go out to California and look at this. Go to Riverside County. This one's surprising. Riverside County, California, down 6% in the number of homes for sale year over year. This was the epicenter of the housing crash back in 2008, 2009, 10, 11, 12, during the great financial crisis. Riverside County was in a hurt locker. They had way more homes than they could ever sell. Prices collapsed there like over 50%. But this time, this housing crash, or whatever we want to call it, housing correction, inventory is not growing like that. Complete reversal, right? So it's, again, it comes down to zip code level looks. It really does. Probably a more granular look than that. You get down to a street level, but today we'll look at zip codes. So that's what we're doing on the housing nerd. Let's get started. We can start looking at some zip codes here in a minute. I'll just take some comments and say hello to y'all. $90815, please. You looked a few months back. Sure, let's see what's going on. Ash Dobbs. Yep, happy to do that one. Any other ones? What's up, Evil Overlord? 44240, thumbs up given. I noticed some houses not moving in my market, but they have no obvious problems. Could the problem be they're overpriced? It probably is. That's probably the issue right now. That's probably the issue. But we'll find out. So we'll take a look at that one. What's up, Statler? 67 gems. 6'7". I don't know what that means. Must be something over my head and below my knees. Don't know. Hopped in late, watching 2x speed to catch up. Your voice is at 2x. It's still soothing. I probably talk really fast on 2x. That's funny. Oh, yep. Got it. Okay. So let's start with some of these zips. Again, drop it below and I'll pull yours up. I have a whole list here of requests I've already received, but y'all are the priority. So let's look at 90815. Yeah, let's look at that. Yeah, and do me a favor, hit the thumbs up if you come in, if you learned anything today. Or if you have a question on real estate, I'm happy to answer that too. 90815. Let's do it. Now, this data is just updated as of, I don't know, updated a couple days ago from Zillow. So this is all Zillow data, just to give you an inside look at what's happening or how people use data in my industry, in the YouTube housing industry. You got guys out there like Nick Gurley with Reventure Consulting. He uses the same data I'm showing you today, the exact same data. So anybody who says Zillow data is fraudulent, go talk to Nick Gurley. He uses that same stuff. Many of the people that say that the data is fraudulent love Reventure Consulting, but they don't realize it's the same data I'm using, which is Zillow for prices, Realtor.com for inventory. Many other people use that. Melody Wright uses Redfin data, and I happen to use Zillow and Realtor.com data. So does Nick Early. But let's look at 90815. What's happening? We're going to start with inventory. Then we're going to look at prices in each of your markets. And let me know if you're buying, selling, just curious what's happening, right? Let me know. All right, let's look at inventory here. We've got 53 homes on the market in 90815. I'm just going to refresh my memory on that, on where that is. Where is that? Long Beach, California, LBC. Nice. Been out there many times. I used to live in California, so I used to spend a lot of time in Long Beach. 53 homes on the market right now. Last year, you had 46. So you are gaining inventory, and you're nearly back to a pre-pandemic level of 59 homes, meaning that pre-pandemic level is when, or I guess right at the pandemic, right before 2020 is when the housing market in most cases was normal, even though in a lot of areas it was, prices were still accelerating then. But we lost a lot of homes for sale during COVID. Then we've been increasing inventory overall the last few years. Now 53 homes in your zip code. So you are gaining homes. That's a good thing. Let's look at days on market. How long is it taking to sell homes in your market? 36 days. Last year, 43 days. So homes are actually selling quicker right now than they did this time last year, if you can believe it. Homes are selling quicker by what? 7 days. All right. Homes moving a little quicker. Let's look at this. Let's look at price reductions. What's happening with price reductions? 15% of all sellers have cut their asking price. That's what this means. 15%. So that's about normal. That's not an extreme amount. That means there's not really more price cuts overall than what there have been over the last, few years. Here's one that Resi Club just put in. Here's a new metric for you. We can look at this one. And I probably won't look at all these metrics on every zip code, but nonetheless, we'll examine this just to find out what's happening with delistings. Share of delisted homes, 5%. That means 5% of all the homes on the market have been delisted. People always want to know that. That's the rage delisting that people talk about. And that's how people are explaining the fact that prices have not crashed nationally, because sellers are pulling them off the market. I don't know. You probably have your opinion about that. Tell me what you think, but it's always interesting to look at this. This is share of homes relisted. So after they've been delisted, how many are actually relisted? 8% of all the listings are relistings. So many think it's like all the listings are ones that sellers pulled off because they were upset they couldn't get their price, and now they've relisted them. But in this zip code, Long Beach, California, LBC 90815, only 8% of all listings are relisted. So just kind of a little more data for the nerds, right? That's what we're here to do, is nerd out on the data. So anyway, let's get to the good stuff, the prices. What's happening with prices in your zip code? Up 3.2%. So, on a real basis, when you look at inflation, they're barely up. Maybe even down, depending on what inflation you're looking at, right? They're only up 3.2%. That's not a lot. But notice they haven't fallen year over year on a nominal basis. They're still growing. They're still growing. Let's look at how much homes are there. What do homes typically cost there? Your typical home value in 90815 Los Angeles, California, $1,074,000 is the current typical home value. Now, the typical home value I'm using today is the 35th to 65th percentile. It's not the most expensive homes. People will always comment and say, yeah, but those are the expensive homes pulling the number up. Wrong, wrong, wrong. What I'm looking at is the 35th to 65th percentile, so the middle band of homes. They take out the least expensive, they take out the most expensive. I like that look. And again, I think this is exactly what Nick at Reventure Consulting uses. But anyway, you can see that right now prices, they're not, are they at an all-time high? Let's look. They're not at an all-time high. All-time high was like 1,079,000, so they're off $5,000 from the all-time high. But when you're spending $1 million, what's $5,000, right? Wow, that's an expensive market compared to other markets, not compared to California, but compared to the Midwest. That's really expensive. I wonder how much condos are there. Let's look at condo values. That was single-family houses. Let's look at condos. $527,000 for your typical condo in Long Beach, California. So it looks like you can see, I would think sellers are probably waking up where you are and deciding, you know what? I'm not going to get the price I want, so I need to list at a price that makes sense. And then people are buying, homes still there. I mean, the days on market is lower. You got inventory growing a little bit, but prices haven't crashed. They haven't cratered there, although they're not skyrocketing anymore either. So it's kind of turning into maybe a normal market there. Is that possible? Maybe. I wonder what taxes are there. I think I have taxes in this. I'm just curious. What are property taxes running there? That's a big deal here in Ohio. Let me look. Wow, look at that. Median annual property. This is crazy. Median annual property tax in Long Beach, California, $6,000. That's low. On $1 million home, that'd be like, I mean, here in Ohio, you're going to pay at least probably 12, 13, 14, maybe 15 grand a year in property tax in Ohio on $1 million home. But maybe even more, depending on your tax rate, obviously. But yeah, the median property tax, this is 2024, based on Census Bureau data, by the way, $6,000. Wow. Let's look at one more metric here where you are. I think I have this. I'm curious on mortgage-free homeowner share. How many homes are paid off? What percentage? 25% of all homes in your zip code, 90815. 25% of all homes are paid off. That's not very high. I think national average is like 40%. It's been falling over the last few years. I mean, you peaked in 2015 at like 30% of all homes were paid off. Now it's 25%. I don't know if I have anything else here interesting for your zip code. Doing a little deeper dive into your zip code than I typically do. Got the rent. Let's look at rent. How much is rent? $2,951. That's down. It's down slightly, it looks like. Oh, no, it's not down. It's up still, 2.7%. So rent hasn't crashed. It's still expensive, $2,900 for a typical rental. That's what I see going on in Long Beach. Let's see. Thanks, Ash, for suggesting that one. Let me just see if you commented at all. Nope, you didn't. Just curious if you had any other questions. Okay, I hope that helped, but it doesn't seem like the world's ending where you are, but it's coming back to reality at least, which is nice to see. All right, let's do another one. 44240, you're in Ohio. By the way, I am doing an Ohio live stream today at noon Eastern. So doing an Ohio live stream after this one for just on my Ohio channel, 44240. Oh, come on. All right. Let's look at 44240. That's Medina, right? Am I right? Kent, Ohio, home of Kent State. 31 active listings right now. You're not growing your inventory at all. It's just miserable. Your inventory there is horrible. Look at the difference between where we were in California with inventory and where we are now in Ohio. I mean, you're half of what you had before COVID, and you haven't really grown it. I mean, you were at 24 listings at one point in 2021. Now you're at 31. You ain't grown anything. Not good. Not good. And I quite frankly don't know how you're going to gain inventory. You're going to have to wait for somebody to move, pass away, go into an old people home, give a house away, be forced to sell, or they're going to have to build new homes. I mean, it's, yeah, not good. So let's go to median days on market. How long are homes sitting? 26 days. Last year was 30 days. Homes are selling quicker. They're selling quicker than they did last year, which is completely shocking. Completely shocking. Let's do price reduction share. 10%. That's it. Only 10% of sellers are cutting their price. Let's go down. I'm curious on property tax. And you probably know what's happening with property tax there. We all are. Yeah, look at this. I mean, we'll show you the typical value in a minute, but the property tax is in Ohio, in this zip code, $3,283. Remember what it was in Long Beach, California? It was $6,000, but that was on $1 million home. Wait till you see this. $3,000, $3,200 for your median property tax in 44240. I'm happy that Lancet Resi Club put that data in the chart for us because that helps us kind of understand what's happening with taxes. That's a big affordability factor. Taxes are a huge affordability factor. Let's do prices now. Up 4.3%. The fact is, in Ohio, still a lot of home price growth. It's not explosive growth, but it isn't crashing. And that goes pretty much is on par with the most of the U.S. 4.3% up in prices. Now, let's do the typical home value. $257,000. That's pretty far off from where we were in Long Beach, California. So you're at a record high. Homes have never been more expensive than they are today in Kent, Ohio. But remember the property tax? $3,900 on a $257,000 home. In Long Beach, property tax was $6,000 on a $1 million home. I mean, at this rate, you'd be at what, $9,000, $10,000 for a $1 million home in Ohio, in Kent? At least $9,000 or $10,000. So property taxes can crush you. But look, nothing has changed with your zip code, really. Evil overlord, nothing really. I mean, at the end of the day, you just don't have anything on the market. You got no inventory, man. No inventory. And I don't see how that's going to change again. It's bleak. A lot of the houses you probably have in the area are old, right? Ohio homes are old. Midwest homes are old. So unless somehow inventory materializes out of thin air, you may not see a price decline or a meaningful price decline for a long time. You need inventory. You need homes for sale, pal. What's the next one? What do I got? Emily, how you doing? 12054. 12054. Let's do it. New York. me just look that one up. If you can, put your city in. Do me a favor, put your city in when you're requesting a zip code and tell me if you're buying, selling, investing on what you're doing. It helps me understand kind of your goals. Also, if you put the city in, I won't have to look it up because I like to understand these markets instead of just a zip code. It'd be nice if it came up automatically, but it doesn't. 2054. So I got to look it up in a separate tab. That is in Delmar, Albany County, New York, town of Bethlehem, huh? Adjacent. Yeah. Says it's the hamlet of Delmar. You live in a hamlet. How interesting. 12054 in Bethlehem, New York. 18 homes on the market. You got nothing. Look, I mean, this is nuts. Look at what you were experiencing before the pandemic, Emily. 56 houses on the market back in 2019. 56 homes. And now you have 18. You haven't really added any homes. It's taken you 1, 2, 3, 4, 5 years to add 5 homes. There's probably nowhere to build out there, I'm guessing, like no new construction, probably very draconian zoning laws and, rules about how many houses you can build in an area. And then that's the way the Northeast is overall. The Midwest is like that too, believe it or not. And so you probably just don't have any new construction, and it shows. 18 homes, that's insane. Wow. Okay, let's look at days on market. 21, last year was 26. So you have really no homes on the market. Homes are selling faster than they did last year. Believe that. Crazy. Crazy. Let's look at prices. What's happening with prices? Wow. This is what happens when you have you have demand with no inventory. People always want to know, why hasn't the housing market crashed? Like, why that you see, I mean, you've seen headline after headline, right? Like, if you open up YouTube, you're going to see, and if you watch other YouTubers on the housing market, especially the ones that get all the clicks, typically they are telling you that just around the corner, prices will crash. You have to ask yourself, what's the mechanism? What's the incentive for the housing market to crash wherever you are? Well, in Emily's case, you need inventory. You gotta have people, you gotta have homes on the market. But right now you don't. And that's why prices are up 6.2% year over year. That's not small growth, that's big growth. And if I look at the typical home value, look at this, $464,000, which seems cheap for New York. But that's an all-time record high. Homes have never been more expensive than they are right now in this New York zip code, 12054. Bethlehem in Albany County, New York. It's nuts. It's really crazy. Yeah, you just don't have any for sale. And if I look around your market, look at the zip codes around your market. This is the number of homes for sale right now. 18 where you are, which is actually good compared to 12159. There's only 5 homes. 12077, there's 3 homes. 12209, there's 7 homes, 18 homes. You get the point. There's nothing. You got nothing. If I zoom out, it doesn't get any better. Just no homes on the market. And I'm curious, as I go through this data, is this what you're seeing where you live? Does it reflect what you're seeing? Oftentimes it does. If it doesn't, let me know. But this is not great. Let's look at your property taxes there. I am curious, though, what's happening with property tax. And if there's a metric you want to know about, drop it in the chat. I'll try to jump in to the bottom of the chat to look at what your comments are as I'm reviewing your zip code. I typically forget to do that, but I'll try to remember today. Let's look at property tax. What's happening? $7,500. $7,505, and that's on a $400 and some $1,000 home. Not cheap. Not cheap at all. No doubt. That's definitely a factor when you're buying a home. Let's look at the number of homes that are the share that's paid off. I'm curious what that is. %37%. Remember when we were in Long Beach, California, it was 25%, I think, approximately. Now in Bethlehem, Albany County, New York, it's 37%, which is closer to the national average of about 40% of all homes paid off, 37%. I wonder if I have, let me see if I have this other data here. You may be interested in that. Let's look at, real quick, we'll look at rent. Rent is $2,195 as of 2026, $2,195, and that's up. Oh, it's not going to tell me. Not going to give me that. This data is not here in the year before. Oh, no, it's here. It just didn't pop up. $2,202 last year. So this year it's $2,195. So it's down slightly or flat. We're seeing that in a lot of markets. Rent's just not exploding. Most areas it's not crashing. It's just kind of going along, just kind of floating along, floating sideways, maybe slightly down, maybe slightly up with rent, but doesn't look like your rent is crashing. So, yep, that's what's happening in your area. You need more homes. You just need more homes, Emily. And again, I don't know how you're going to get them. What mechanism would cause more homes to appear on the market magically? I don't know. Have to build them, or somebody has to give one up. That's the bottom line. Thanks, Emily. That was great. I love looking at New York. What's up, Annie? How are you? Good to see you. 30110. Did I just look at one of those? 301. No. 30110. Let's look at that. Where is that, I wonder? Let me find out. 30. That's in Georgia. I figured that. Bremen, Georgia. Let's look at Bremen, Georgia. All right. Bremen, Georgia you've got 76 homes on the market right now. So inventory's grown. Last year was 57. Not that many. But it's a decent amount for you. If I go back the last 10 years, you're actually at a 10-year high with inventory. Look at this. I go back, you got more homes than you've had for sale in the last 10 years, as far as a monthly number goes. Not just when I look at June, and these are all June numbers, by the way, but if I just look overall, is there a point at which you had more? October of 2018, you had 88. Oh, November, you had 82 of 2018. So in 2018, in this little spike here, looks like you had more inventory than right now, but it's close, right? Nonetheless, you are growing your homes for sale. I mean, look at the difference in markets, right? You got Albany, New York, where there's no hope for inventory. You got Kent, Ohio, where it doesn't look like there's any hope for inventory at all. Then you got Georgia, inventory growing. There's really not one housing market. It's just really your housing market that matters, right? So 76 homes. Now let's look at median days on market. Homes are selling faster. Look at this, 50 days. Homes went into contract in 50 days in June of 2026. Last year was 66 days. So homes are selling faster right now. Surprising. It's selling, but so far they're selling faster in all these zip codes we're looking at for the most part, it seems like. Let's look at home prices. Up 1.6%. They still haven't crashed. In fact, they haven't fallen year over year at all. If I go back over the last, year or two, you haven't seen a decline of home prices year over year yet. Although the growth at 1.6%, that is negative on a real basis if you count inflation. So you're not beating inflation with your home price appreciation, although on a chart on the nominal basis, not counting inflation, you're actually up slightly, but just 1.6%. Again, seeing this throughout the U.S., a lot of markets that are just bumping along. Will those markets turn negative in the future? They could. Market like yours, where you're gaining inventory, you could see that. You could see a downturn if we continue to gain inventory. If we have job losses in your area or across the country, if all of a sudden the job market falls apart, or maybe if the stock market doesn't, keep performing, which obviously there's a cycle there. So as that rolls over, people may decide that it's time to sell. You never know. But overall, it really comes down to inventory. You just got to have more homes on the market. And that will cause people to reduce their price more, cut prices more, list for less, and buyers will have a lot more negotiating power. Look back in 2022, prices were growing 20% year over year. Completely different world than today. I mean, the difference is crazy, right? You were growing 20% back in 2022, and then that growth stopped. How much are your homes? Let's take a look. $294,000, which is still an all-time high. So you're still at all-time high record prices in your market. And that's for that middle range. It doesn't count the most expensive places or the cheap places. $294,000. Let me just check property taxes real quick. Wow, look at that. $1,908 for your median property tax in Georgia. It's pretty cheap for property tax. Even though it's gone up steadily, right, over the last several years, it's not like it has in Ohio where it's gone up. For some people, property taxes in Ohio and like Texas, some other states too, I mean, they've gone up, 25, 30, 40% in the last few years. So you're at $1,900. Your property taxes look pretty reasonable. And this is according to the U.S. Census Bureau, by the way. Okay. So that is Georgia. Bremen, Georgia, 30110. Let me just check and see if you had any questions or comments at all. Oh, shoot. Let me see if I missed anybody. No, Annie, I don't see you on here commenting at all, asking anything else. That's your zip code. Hopefully that helped. If it did, give me a thumbs up. Share my video. That always helps too. All right, what's next? Imagine 916-07095 Woodbridge proper. Okay, 07095. Let's look at that one. Again, let me know if you're buying, selling, what you're up to. Helps me frame up, the analysis. 07095. New Jersey. All right, let's look at New Jersey. Where in New Jersey are you there? Oh, near Staten Island, huh? All right. What's happening in New Jersey? 41 homes on the market right now. And that's Woodbridge proper. 41 homes on the market. Last year, 42. So you lost one home. Not the end of the world, but again, just like we looked at in Albany, I think that was that Emily in Albany? 72 homes back in 2019, but now you've got 41. So you got like half, maybe 30, you're down maybe 40% in the number of homes for sale versus 2019. That's just not great. I guess since the bottom in 2023, in June of 2023, you are up So you have more homes than you had in 2023, but you still don't have enough to probably cause any pain. As an example, look at this. If I go all the way back to 2016, 10 years ago, you had 130 houses on the market. And what's interesting is that since then, overall, you've been trending down in the number of homes for sale. You haven't been gaining them really. And you had a bump here through right before COVID. You had a bump that looked like you were gaining some steam with the inventory, but then it just fell off the map and hasn't really recovered. So that's always a difficult thing to swallow. Wow, look at median days on market. Last year was 44. This year, 29. So homes are selling quicker at a good clip quicker, right? I mean, they are definitely selling quicker in Woodbridge proper, New Jersey, 07095. All right, let's do prices. What are prices there? You're up 2.5%. So again, we're seeing this, except I guess Albany, they were up a lot. In Ohio, they were up a decent amount, 4% or something, I think for Kent, when we looked at that earlier. But in New Jersey here, prices up 2.5%, not exploding. If I look back over the last several years, prices were growing at 10% easily in a lot of cases, right? 11%. I mean, shoot, just last year at this time, prices, look at this. Last year, prices were up 10% year over year. That means every month you compare it to the previous year, you're up 10%. In 2024, it happened, and in 2025, it happened. And now that growth is slowing. In fact, you're at like a 10-year low of home price growth. Will that go negative? I don't see, it could go negative, but would be surprising. So the moral of the story here, your home price growth has been off the charts, and it continues to go up. What's the single family value? Yeah, right now, single family value, 35th through 65th percentile. So that middle range, not the median. They're just taking out all the high stuff and all the low stuff. $531,000 is your typical home value, according to Zillow. That's the typical value. It's not an all-time high, though. Not an all-time high. That happened a few months ago at about 538. But yeah, homes are still expensive in New Jersey. Let's look at property taxes. I'm curious. $9,558 is the median property tax payment in your zip code. That's not cheap. That's a factor when you're buying a home. No doubt about it. No doubt about it. Let's look at rent. What's up with rent? Typical rent, $2,600, and it's up maybe, what's that, up $100 year over year in rent. And this is the middle rent, just like the typical home value. So they're taking the 35th through 65th percentile for rent, and that's how they're looking at this. And it's from Zillow as well. $2,600 for your typical rent. Yep, that's what's happening in New Jersey. 07095. You just need more homes. You do need more homes. Let me go back and look at this inventory again. Yeah. You just don't have anything. Again, what's the mechanism to create homes? Like, what? Somebody has to have an incentive to either build a home or sell their home. And this is an important factor. Like it may be the most important factor in the housing market is the incentive of buyers and sellers. So if I'm a homeowner in New Jersey, in your zip code, I have to ask, why would I need to sell my home? To buy another one? To move up into a more expensive home? Well, right now, interest rates are creeping to 7%. I mean, they're close. They're getting there. They're like I don't know, yesterday when I looked at, they were at 6.7%, 6.77, according to Mortgage News Daily. So why would I trade in my current rate that's probably better than 6.7 to buy a more expensive home, to pay more property tax? No, I'm not going to do that. I'm just going to stay put. So they don't sell. That's why the homes aren't on the market. And if I'm a builder, what's the incentive to build a home there? Well, if there's nowhere to build in New Jersey, if there's no incentive to build a bunch of homes and there's no profit in it, I mean, demand right now for new homes is low too. There's just no incentive. Therefore, inventory doesn't come to market. Therefore, prices can't really do anything. They just stay stubbornly high. That's kind of the cycle. Sweet. Thanks for the New York one, or the New Jersey one. My fault. Richard B., what up? 33160. Huh. All right. And you're buying. 33160. In Florida. All right. Let's look at Florida. 33160. Where in Florida? That looks like it's Sunny Isle Beach, Florida. Perfect. Let's see what's happening. Hmm. 33160. Right here. Right on the beach. Yeah, look at that. Wow. So you've got 1,000. Thank you for suggesting Florida. Thanks for jumping on and adding this one, because it's going to give us a different look than what we've been seeing so far in the Midwest and the Northeast, which is the market is horrible. There's some movement where you are, at least. You've got 1,793 houses on the market. And it's not like New Jersey that we were looking at is a low population area, right? There's a lot of population there. You just have a lot of homes for sale. Although, and this is what a lot of people won't tell you, like, you're never going to hear this right now from people that just want you to believe that the market is definitely crashing overall. And especially those that live in Florida or want to talk about how bad Florida is. They probably got ahead of themselves and didn't really think about why people would need to sell or not, because inventory is falling right now where you are. You've got 1,793 homes. Last year in June, get this, last year in June, and this is in Miami-Dade County, Sunny Isle Beach, Florida. Last year, you had nearly 2,000 homes on the market. You've lost 200 homes year over year. Where'd they go? We can find out. But nonetheless, you are down in inventory, and you're not at a 10-year high. So look at the inventory trend. You were gaining homes for sale before COVID. Then COVID came and your inventory went away, completely vanished, down to 960 houses. I mean, you went from 2,600 homes in 2020. I mean, look at this, Richard. Unbelievable. You went from 2,600 homes in 2020 to 960 homes in 2022. You lost a ton of inventory. And now you're starting to gain it back, or you were, gaining it back until this year. Now you're losing inventory. Surprising. Let's look at days on market. 105 days. Woo! That's way different than New York. Homes are selling about the same amount of time as they did last year. 104 days last year, 105 days this year. But it looks like they're always selling in about 100 days, except during COVID when they were selling in 59 days. Man, this is a great market to compare to the other ones. Let's look at, I want to look at price reductions where you are. Only 9% of all sellers cutting their price. That ain't that many, right? Last year was 14%. So you had more sellers, you had more inventory last year than you do this year. And you had more price cuts last year than you do this year. So sellers aren't as desperate. Doesn't look like from the chart data anyway, but you tell me what you're seeing. Here's the big one though. Let's look at delistings. Okay, so 19% of all houses that were on the market in June were delisted. Basically 20%, 1 out of 5 were taken off the market. Last year it was 20%, about the same amount. This year 19, so it's about the same amount. And here's what's interesting. Again, people aren't going to tell you this information when they're trying to scare you about anything in the housing market or finance in general, I would imagine. They're not going to show you both sides of the coin. But if you go back in history, look at the delistings. They were always around 20%. I mean, during COVID, they came down a little bit, right, to 14%, 18%. But back in 2020, they were 22%. What does that mean? It means that the whole idea of rage delisting is not new. And there isn't an explosion of delistings, no matter what you hear from others. The data is right in front of us. You're not seeing more people take their home off the market, and you're not seeing more price cuts than typical. Just normal. So far you've got fewer homes for sale. You've got fewer people cutting prices. You've got fewer delistings, which is really shocking. I would have thought that we would see a lot more delistings, but we're not. Let's look at prices. How are prices holding up? Down 3%. Down 3% year over year. And you can clearly see what happened, right? Homes were running up like you've never seen. I mean, look at this. 31% of, you had a price gain of 31% back in 2022 in June. 31%. That means a house, the same house, in June of 2022 versus June of 2021 was 31% more expensive. In fact, and this is a wild thing, you've had year-over-year price decline in your zip code pretty much every month except from 2021 through the end of 2023. I mean, I go all the way back to 2018. And you had price decline in 2018, 2019, and then COVID literally changed everything, and your prices skyrocketed up and then fell right back down, and now they're down year over year. And because your inventory exploded, right? Although you are losing inventory now, it's a completely different market than what most other housing markets across the country look like. So here are prices, your single family home price, $1,184,500. Prices haven't crashed. They're not at all-time highs, but they haven't crashed. You're just kind of bumping along, right? But since 2022, they've come down. They have come down. So you're buying, right? I mean, there are probably great opportunities out there, I would think, to make disrespectful offers. Assuming you're not buying, in a desperate way, like you're like, I got to buy today. Go see a ton of homes, as many as you can. Take your time, be patient. Make offers that make sense to you, not the seller. Sometimes it doesn't even really matter what the seller is asking as far as a price goes, because you can just offer what makes sense to you. So if the price, the median price, or the median price, the typical home value at 1.1 million, maybe the offer, if you go see a home that's listed at 1.1 and you decide, you know what, I'm only going to pay 850 grand for this house. Make the offer at 850 grand. If you do that enough, you will find an opportunity, especially in a market that has overall inventory is up since COVID. Take advantage of that. And look off market. Look at expired listings. People that took their home off the market. Maybe they're willing to play ball. But it doesn't seem like prices are crashing there. Inventory isn't exploding, but you have more than you did a few years ago. Some more choices, some more leverage for you. Personally, me, I like to look for fixer-uppers. I work with a lot of clients that like fixer-uppers because you can, generally speaking, get some, get a discount when something needs work. So I'd say take your time. Don't expect the prices to fall through the floor, and don't expect the market to hand you anything. But be patient and don't stretch yourself into being house poor, because that sucks. Nobody wants to be house poor. I hope that helped. Thanks for suggesting that. Great market to look at. Love it. Ooh, this next one's going to be good. I don't have a zip code from you. You know what? Let me go back to Richard real quick. I just want to see if you asked any questions. I always forget to do this. Richard, are you in here? I'm just looking back at the comments that just came in to see if anybody, or if you asked about that market I've just analyzed, Richard. No, you didn't. So do you want me to look at Seattle or not? I don't have to, but that market's hurting. There's no doubt. I paid $12,000 for my house in New Jersey that I bought for $525,000. Pay $12,000 for my house in New Jersey. I don't know what that means. You mean property taxes? Oh, it's 1,000 square feet. Oh, whoa. Yeah, New Jersey's off the hook, man. Prices there are insane. Yeah, so a lot of people, you'll hear people say that like Detroit gives away houses. Maybe they do, but they need $200,000 in work. Like they've got, knob and tube wiring, slate roofs that are falling apart, old windows, probably wood siding, galvanized plumbing. So, giving a house away is nothing. And by the way, those houses will be demolished. That's why the silver tsunami, folks, is you're being hoodwinked if you think that the silver tsunami is going to cure the housing market. You're being hoodwinked because there's a bunch of houses that are going to be demolished. So you're going to be left with either old homes or new homes. And we know how new homes are built overall right now, according to TikTok. So if that's true and new homes are crappy, well, what are you going to be left with in the silver tsunami? Riddle me that. Yeah, Ash, good job. You have a 2.75% rate you'll probably hold. Like that Just think about this for a second. You've got an interest rate on your mortgage that's actually lower than inflation, or nearly lower than inflation. That means you have a negative interest rate. That means the bank is essentially, technically, on a math, using just math, the bank is paying you to keep your home. You have a negative interest rate, a negative real interest rate when you subtract inflation, right? If inflation is 3% and you have a 6% mortgage, your real interest rate is 3%. That's why if you have a cash flowing rental and heaven forbid you've got a 3% rate right now, it would take hypnosis by aliens to get somebody to sell that rental, because you're gaining cash flow and your interest rate is effectively zero when you subtract inflation. Inflation eats away debt. Good debt, not bad debt, but good debt. It eats it away. That's why the government likes inflation, because as they have tons of debt out there, we all know they do, the inflation eats away the debt. It's a crazy thing to wrap your head around, but it's true. That's why asset holders, generally speaking, do well, because they know that inflation helps them, doesn't hurt them. So do you think the government wants deflation? Probably not. Good job on your 2.75. Buying a home using Section 8. Good for you, man. Great. Housing nerd, is home builders still cratering? If mortgage rates hit 7%, do you think banks will come out with alternative mortgage policies to keep people coming in? 40-year mortgages or something else? I don't know that it's the rates. I mean, there's a lot of builders that are giving away insane rates, right? They're giving away like 3% fixed rates for 30 years. I mean, that's pretty good. If you look at the curve of permits, of issuance of new permits and under construction, it's down significantly. So our supply of new homes right now, a finished supply, is like at 9.5 months. It's high. It's not high compared to historical standards, but it's definitely higher than it has been. And so because of that, you've got a lot of inventory right now, but the pipeline behind it is not good. It's low. So I think what will happen probably is that you will see home builders continue to struggle to sell new homes, but that inventory, as it's sold in the next couple years or year, you're going to see the inventory fall because the pipeline behind it is not robust. So I think home builders will continue to struggle, but they will bump along. And if there's a massive crisis, just like they did in the GFC, the government will bail out the home builders. They did before, and they'll do it again. So I don't think they'll need to come out with alternative mortgage programs for that. I really don't. And you got to remember, not everybody wants to buy a new home. And the areas that need a lot of homes to be built, like New Jersey, right? And like in a lot of places like Ohio, there's nothing being built. So the places that are struggling right now to sell new homes, for the most part, are in areas that have a lot of inventory: Florida, Texas, the Sun Belt, Arizona, that type of thing. Hopefully I answered your question. Ohio comes with stunning weeds and Tyrants. I don't know what that means. There are a lot of weeds here, though. That's true. Who else has one? Here we got one here. Kathleen, what up? 88011 Henderson, Nevada. I was just out there. All right, let's look at Henderson, Nevada. 88011 Henderson. What? This says it's New Mexico. Did I get it wrong? 88011 Henderson, Nevada. That's weird. Well, I'll type in Henderson because you gave me the wrong zip code, I think. Can I type in? Okay. I'm going to do Henderson, Nevada. Yeah, that's not the zip code for Henderson, Nevada. Did I mess that up? You tell me in the chat here if I messed it up. Let me go to the bottom. 88011. 88011. Yeah. I don't know. 880. Yeah, that's weird. Okay, well, I'll do Henderson here. I've got Las Vegas Henderson Paradise. I've got that. The zip code you gave me, though, came up as New Mexico. Lake Las Vegas. Let me look that one up. $89011. That's what happened. Okay. All right, let's look at 89011. Lake Las Vegas. Yeah, look at this inventory. See, completely different than Albany or Ohio. You've got 491 homes on the market in June. That is a 10-year high. I go all the way back to 2017. You didn't have that many homes. You've never had that many homes on the market. 491. That would seem to be a buyer's market. Big time. What's median days on market? 62. So homes are sitting 9 days longer, and you've got a lot more homes on the market. So that's so far is going in the favor of a buyer. And then let's look at prices. What's up with prices? Yeah, down 2.6%. Prices are falling there. No doubt about it. They are falling. Not collapsing yet. Depends on what your definition there is of collapsing, but down 20% since 2022, probably not. But they are down year over year. And your home price, $483,000 in Lake Las Vegas, 89011. $483,000, right? That's not an all-time high. Your all-time high was 513. So pay attention to this. Look at this. If I go to, let me do this. Go to 20, let's do 2019. So I'm going to do 2020. So I'm moving this graph just so you can look at 2020 through 2026. That's all I'm looking at. And you can see prices started at 353 and now they're 483, although they peaked at 513 grand. So if you think about that from a housing market standpoint, and then I look at inventory during that same period of time, watch this. Look at the inventory trend. It matches, right? You basically grew inventory since 2020. And right around this period of time here is when the prices peaked. And then as inventory continued to grow and grow and grow and grow, prices fell. Prices came down. That's why you have to have more homes for sale. It's very simple. Inventory will drive everything. It just will. So I would say if you can continue to see homes being thrown on the market, you may see prices fall even more. You may. I wonder what taxes are like out there. By the way, every state has property tax. Anybody who tells you that Florida abolished all property tax, they don't know what they're talking about. Florida's not abolished property tax. They've just changed the rules, but they're going to make it up somewhere else. And people do pay property tax in Florida. $3,000 is your median property tax payment. And that's on, what was that again? $3,129. How much was the typical value? $483. It's pretty good. So property taxes for some people aren't a big deal, like in Nevada. Not a huge deal. Kind of like, it's part of the mortgage. It's not going to go up that much. I wonder how much condos are where you're living. Let me look at that, or where you're asking about. $310,000 for your typical condo in Lake Las Vegas. And look, they were at 340, 350, 353 or so is where they peaked in condos. Now 310. Those have fallen a good bit. And they're falling. I mean, you can see this line is going down. I don't have condo inventory, unfortunately. I have all inventory. Yeah, so condos are bleeding there. I mean, some of these markets like this, you get a lot of homes on the market because, make some low offers. Make an offer where the seller gets the offer and they're like, that's low. Yikes. You're not going to go to jail for making a low offer. And you never know, that same seller could come back around and want to, wheel and deal later on. It's possible. Okay. Looks like you got some opportunities out there. What's this? What are gems? I don't even know what a gem is, honestly. I'm sorry. I don't even know what a gem is. Is that a super chat now? I guess I'm not up on my YouTube stuff like I should be. Thank you for whatever that is. What's a gem? Yeah, I don't even know what that is, man. But thank you. Whatever it is, I appreciate it. Sweet. What's up, mortgage nerd? How you doing? Good to see you. Still selling those video game systems? Those are cool that you're selling online. I always check that out. This guy right here, mortgage nerd. If you're looking for a mortgage, contact this guy, Steve. He's, I'm sure he'll drop his info below, but I think he can help people throughout the U.S. And I haven't had to do a mortgage for myself in a while, so I haven't called you, but I'm kind of just bumping along. Haven't had any issues, but thanks for jumping in, Steve. What's next? Oh, Steve, what's up? I worked loss mitigation with Chase Bank during the mortgage crisis. Shoot, I got to get you on here and talk to you about that. And it was insane. The cost Detroit was selling homes $5,000 to $10,000 in most instances. Yeah, they were doing the same thing in Columbus, right? Selling in probably a lot of cities through the U.S., just giving away homes that needed $200,000 in work, built in the 1800, right? 8 Mile. Shout out Eminem. Good morning. What's up, Wendy? How are you? I'm moving from California's Bay Area, Santa Clara, 95051, moving to Tucson, Arizona. I like Tucson. Hopefully the Catalina foothills. More concerned about the selling market here at the moment. 95051. Let's see what we can find for you. 95051. This will be interesting. Let me just zoom out and kind of get an idea where you are. Yeah, you're there in the Bay Area for sure. All right, inventory. 60 homes on the market you've got. Wendy, 60 homes. Last year, 47. So you've gained 13 homes, right? Not a ton, but more than, you've had in the last few years. So as a seller, that just means you probably have more competition than you would have a few years ago. That's all that means. That's all that means. Let's look at median days on market. 31. Last year, 33. Homes are selling quicker. So when I look at this, I think, all right, I expect as a seller that it could take me 30 days or more, at least 30 days probably, to get my house in contract. At least 30 days. So expect that. Maybe build in some buffer zone. Think maybe double that just to be safe. I mean, you could get an offer the first week, right? You could and go into contract, but it may take you 30, 45, 60 days to sell. Depends on, obviously, what type of house you're selling. And I'm not a local realtor there, so you have to work with a local realtor. But to get really granular, because you want to go down to your like neighborhood level, really tough to figure out what's happening. But from a zip code level, it looks like if you're patient and you build in 45 days, 60 days, you should be okay. But don't expect your home to sell in the first week if the median days on market is 30. Now let's look at prices. Prices are flat, basically. Look at this. You've got, they've been down slightly, 0.7, 0.8, 0.4 now. So they're not cratering, but they're just flatlined. In fact, look at this. Back in 2024, they were growing at a decent clip, 12%, 13% year over year. And then the growth just completely stopped. I mean, it literally shut off your home price growth. Wow. Look in 2018, what was going on there? Prices were up 40% year over year back in 2018. I don't know what was happening then. But prices aren't crashing where you are. They're just not skyrocketing anymore. So let's look at your typical value. Typical home value is $2,018,000. And it's not an all-time high, obviously. And it's down slightly from the all-time high. But it's not, it's not crashing. I mean, but look, if I go back to I go back to 2019, pre-COVID, holy Toledo. The typical home in 2019 for you was $1,383,000. I'm not telling you anything you don't know, probably. So $1,400,000. And now that same home is $2 million. Like COVID wrecked us with the housing market. Cheap money, people that are bored, FOMO, no inventory or inventory falling in most places already, equaled a crazy housing market. Lots of people got rich during COVID. Lots of people. And it shows in the housing market and the economy. All right, so that's a typical value. Let's look at your selling. So let me see this. Let me look at this. New listings. We haven't been looking at this today, but it'd be kind of interesting to know. So new listings are the ones hitting the market. How many people are actually listing homes? Last year was 42, this year 42. And that's really not up that much. So you've got the same amount of people listing homes. So it looks like you have competition. You probably just make sure you price your home in a correct way. So really analyze your comps and scrutinize what homes have sold for your type of home in like the last 3 months would be great. Maybe 6 months if you have to, but 3 months over the last 3 months would be the best. Look at what they've sold for. Make sure you're realistic about the type of home it is. So don't, everybody thinks their home is better than their neighbors. So, but be honest with yourself and go, all right, what does that home have that I don't have? What do I have that they don't have? And there's nothing wrong with asking a realtor to comp the homes for you, even if you don't want to work with them. You can always do that too. Just interview some realtors and see what they have to say about the local market. But it's clear that you're probably going to have to price it right. Don't get greedy. Be patient. And, in today's world, I would also think in today's market, probably need to plan on inspections and if there's anything in your house that is questionable, from like a major system, like the heating, the air conditioning, a roof, windows, anything like that, expect it's going to come up in an inspection, and maybe even fix it before you list it. That can always be a good thing. Do a pre-listing inspection is not a bad idea sometimes. But I'm not a local realtor, so you probably have to work with them. I hope that helped. I would think you'd be all right, as long as you're realistic. But people are buying homes there. They are selling. Great. Good stuff. Good stuff. Well, your market is completely different than others. You're like, I know that. I'm just looking at some other comments here. And I'm trying to go to areas we haven't looked at today. YouTube gave me gems for free. I have no idea. I'm just trying to use them up. Yeah, I don't know what they are. I'll have to do some research on that. But thanks for the gems. It's like Clash of Clan or something, right? Whoops. Let me look at this one. This is an interesting one. Hampton, Virginia. Yeah, I haven't looked at Virginia yet. 23664. All right, 23664. Virginia. Hampton, Virginia. 62 homes on the market. And you're gaining inventory, right? You had 17 back during 2023. Now you've got 62. So you are gaining homes for sale, but look, in 2019, you had 76. In 2017, you had 115. So moral of the story, what does all that mean? You were losing inventory before COVID. COVID did not help you. Now you're coming out of the basement, gaining some homes for sale. That's a good thing if you're a buyer. Quite frankly, it's probably a good thing if you're a seller too. It'll probably bring out more buyers if there's more inventory out there, some actual movement instead of people being completely locked in and not doing anything. It's pending listings. I was going to do median days on market, right? What do we got? 59. Last year, 42. Homes are sitting longer, a good clip longer, right? And last year you were, homes going into contract within 42 days, but this year it's another 17 days longer. 59 days on market. And that's that's really where you were before COVID. So homes are taking longer to sell and you have more of them on the market. That's always a good thing if you're a buyer. Let's look at prices. Home prices down 2%. So as that inventory has grown, prices are definitely coming down. Look at December, November, look at the winter of last year. Prices were down 6% year over year. So, it's clear as day when you look at this chart. Prices growing as interest rates rose and inventory rose. Your price growth stopped and now it's gone negative. See, there are markets where prices are falling. That does happen. $319,000 is your typical home value. 319,068. It's not an all-time high, but you're sitting right around there. But the growth has stopped. Of home prices anyway. Let's look at, I'm just curious here. Look at price cuts. Again, I skip around on some of these metrics, so if you have something you specifically want to know about, just let me know. Wow, look at this. So this is a signal. maybe not a trend yet, but definitely a signal. 30% of all sellers have cut their price. That's high. I mean, compared to what we've looked at today, that's a lot. 30%. That's a third. Means you go down the street and look at houses that are for sale, 1 out of 3 have cut their asking price. That tells me they just overpriced their home. But those could be the ones to go after if you're a buyer, where they have cut their price. Although it doesn't necessarily mean that they're going to give you the home, give you a great deal. They could have just started too high. That does happen. It's easy to overprice your home. I still make the mistake as a realtor. Helping people sell homes, give them an analysis. We talk about the price. We end up, listing it too high. It happens. But that's a lot of price cuts, 30%. I wonder about delistings. Let's look. How are delistings doing? Only 3% of all homes delisted. So people aren't pulling them from the market. They're just cutting the price, it looks like. This is a sign. So when I look at something like this, I think, all right, if they didn't need to sell their home, if they just wanted to sell, but didn't need to sell, they wouldn't take them off the market. Right? Like did I say that right? If you need to sell your home, you are going to leave it on the market. You're not going to delist it. If you just want to sell, but you don't need to sell and you're not getting the price you want, you're going to take it off the market. That's why delistings have been so high overall in the US. And some markets were really high last year because people don't need to sell normally right now. They're like, I got a low rate, I don't need to sell. But if you need to sell, you're like, I'm just going to leave it on and drop the price because I got to sell this thing. People that are desperate or in distress, you hear that term all the time from people. It drives me nuts. Oh, sellers are motivated. Really? Is that why we don't have any inventory? But if you're in a market like this where you're like, oh, inventory is growing, price cuts are growing, delistings aren't there, people are just leaving their homes on the market, it looks like, and cutting the price. Maybe they need to sell there. That's a signal you could get an opportunity. So, yeah, this would be an interesting market to watch. And thanks for suggesting Virginia. Hopefully that helped. Hopefully it did. I like Virginia. Here's a comment. What's up, Ty Rock? Yeah, why not tie property tax to the mortgage so it stays stable? I don't know. I don't know if that would work or not. There's always two sides to every coin, right? So there's probably a scenario in there where it would cause it to go wacky, right? Like if you're a new home buyer and you're paying more, like you don't put a lot down on your house when you buy a home, let's pretend you put down 3% or near zero, your mortgage payment's going to be a lot higher, so your property taxes would be higher. So I don't know if that would work. But look, there's a lot of different ways to skin the cat out there with property tax. In many areas, what we're doing right now is not working. All right. 80916. Where's that? Colorado Springs. Yeah, we haven't looked at Colorado. I like looking at markets we haven't examined today already. Let's look at Colorado. What time is it? 10:30, 10:35 Eastern. I got a few more in me here. Then I got to prepare for the Ohio one, the Ohio live stream. So I'm doing Ohio at noon on my Ohio channel, Ohio Housing Nerd. So if you're in Ohio, that's one you should definitely check out. 118 houses on the market. Yeah, look at this. Last year, 105. Year before that, 65, 38. You've grown your inventory a lot. In fact, it's got to be new construction. I mean, look at this. You had no inventory for years. Now, all of a sudden, you've got 118 homes. So it's got to be new construction, right? It's the only way to explain that. I mean, maybe it's not, but I look at that and go, yeah, new construction. Median days on market, 40. Last year, 49. So homes are selling quicker. I mean, in June of 2021, there were 4 days going into contract. Yikes. Now, 40 days, 10 times longer. What's up with prices? Whew, down 2.4%. They've been down months now. They've been down again and again and again. They've been down. So, I mean, you barely had growth over the last few years. Like you had a little bit of growth in 2024 in prices, but my gosh, I mean, you were growing at 17%, 18% year over year back in 2021. And you were growing at 10% before that, but you didn't have any homes for sale. Now, all of a sudden, you've got inventory, prices are coming down. That's what supply does, folks. That's what supply does. The typical value, wow, it's really coming down. Look at this, 347. Yeah, 347, 800. You peaked at 386, approximately 386. So prices are down, and they continue to fall, it looks like. It just amazes me that you had no homes on the market at all for sale. None. Now you've got a lot. I mean, a lot compared to what you had, right? Go back to this inventory. You had 33 homes, 15 homes, 18 homes, 38, 65 homes. Then you went 105, then 118 homes. You definitely have inventory. And the prices are reflecting that. Their prices are definitely reflecting that. Let's look at the price reductions. Are people cutting? 24% of sellers are cutting. Last year was 36%. People were definitely cutting their prices. Because there's more inventory, there's more competition. I mean, you wake up in the morning, this happens all the time, right? In a normal market, it happens where you wake up after you've listed your house and there's like 3 more down the street listed. And they saw you list it, whatever, 386. And they're like, oh, I'll list mine at 379. And you're like, shoot. And if their house is the same as yours, what are you going to do? You probably have to cut. So you slash your price. More competition leads to people cutting. What about delistings? 12%. Okay, that is higher than what we've seen in other markets. So you've got people pulling their house off the market. You do have people cutting their price. You have inventory growing. Longer days on market. Lower prices. That all signals to me that it's a buyer's market where you are, or at least shifting that way. It's not bleeding. It doesn't look like the market's bleeding out, but man, it's you've got opportunities, you'd think. And if you're a seller in a market like this, you better be really strategic about your house listing. Take good pictures. Don't use your iPhone to take listing pictures. Unless you're giving away a house, right? You're like, you've got like a second house or a rental and you're like, I don't care. I'll just get like whatever I can for it. Fine. And you're being a cheapskate, you don't want to spend money on a photographer, fine. But if you're trying to get your maximum value out of a place, it's your like primary home, pay somebody to take pictures. It costs you, $300 to $500, depending on what kind of photographer and package you get, but they do a much better job than you're going to do with your iPhone. So market your property, clean it up, make sure it's lit well, list it right, and be patient. And be patient. And be realistic with yourself, right? You don't want to go, oh, my house is much better than my neighbor's because I have a fish tank, or I have that game room downstairs, or, I don't know, I put in a patio or something. It's like, okay, well, that could be incentive, but a fish tank isn't. 12% of all people delisting. All right. That is Colorado Springs, right? Colorado Springs, Colorado. Sweet. Good market to look at. Oh, here we go. Steve, what's up? This mortgage guy I know locally. Anyone interested in financing a home or investment property or simply have questions about how mortgages work and what the rates are, please contact me by email. I'll send over my phone number. There you go. Good job, how's mortgage nerd. Hmm. Oh, this is great. This is a great point Steve brings up. If you're listing your house, a pre-listing inspection or appraisal is an inexpensive investment for owners who are looking to possibly list their home. That's true. The downside to a pre-listing inspection is that in most states, like in Ohio, and I can only really speak for Ohio, but I would imagine other states follow this rule, is that if you know something is wrong in your house, a material defect, you must disclose it to buyers. So if you do a pre-listing inspection, the only downside there, or risk, is if the inspection reveals something you didn't know about, you're going to have to disclose that to buyers. But at the end of the day, it's not a bad thing because you're probably they were going to find it anyway in an inspection. So at least you get ahead of it and you know ahead of time. It's far better in a transaction, and it's legally required to disclose everything that's wrong if you know about it. But the pre-inspection will give a lot of buyers confidence that you've already done that. And that just gives you a leg up and helps you prepare, right? So yeah, that's a great point. And an appraisal the same way. At least you know going in what the thing's, what the thing's worth from an appraisal standpoint. Let me do a couple more here. Okay, so you on Oberlin. I'm jumping on my live stream for Ohio here at noon. Join us for that one, and I'll gladly do Oberlin. Everyone talks about it being a seller's market in Florida, huh? Okay. And seller concessions, but no one talks about what a well-structured deal looks like. Like, what should I even be asking for? This is a great question. As a buyer, you mean? I assume that's what you mean. Well, you're gonna have to tell me in the chat. I thought it was a great question, but I just want to make sure. You're a buyer? It just depends on what your goals are, really. But let me know if that's what you mean. Oh, here's one we've never done. I don't think I've ever looked at this market on the live. What's up? N Bidwell, 99208. I've been to Spokane many times. 99208. I used to live in the Seattle area, so I've been out there many times. All right, inventory, 192 homes on the market. Last year, 165. You've gained inventory. You got, almost 30 more homes. But look, in 2021, you only had 43 houses on the market. 43 houses. Now you've got 192. That's growth of inventory. And this is actually a 10-year high of homes on the market. A 10-year high. Holy cow. Median days on market. Last year 36. This year 38. So two more days on market to sell your home. Homes are moving about the same amount of time in Spokane, Washington. It's not like they're sitting for 100 days. But look, in 2021, they were selling in 13 days. The market has changed. It is not 2021 anymore. Not at all. Not at all. What about prices? Up just 0.1%. Look at this. Prices have been flat there essentially for months and months and months. No movement at all. Not up, not down. They were down in like 2023. They were falling. And you could see the growth that you had before that. And then they fell. Prices went, the growth went negative. And now just kind of bumping along flat. Not a crash, not a boom. We're seeing this in a lot of areas. Just not a lot of movement. Single family home value right now is $470,000. Again, you can just see that flat line, right, is just not gone up or down that much. You peaked at 497. So you're off from that about 30,000 bucks. If you keep gaining inventory, could you see prices fall? Probably will. If you continue to gain inventory. Remember, you're at a 10-year high of the number of homes for sale. More inventory, unless there's a ton of buyers running in, probably going to see prices fall. Probably going to see prices fall. Let me look at price cuts. Price reduction share, 19%. Last year was 28%, though. So you've got 20% still of all sellers cutting their price. 1 out of 5 homes have had a price reduction. What about delistings? Just 5%. Only 5% of homes have been delisted. That basically means 95% of homes are either still on the market or they're selling. That's really what that means. So the majority of homes are still selling. What's rent there out there in Spokane? $1,600. That's not that bad. And it hasn't crashed. Rent has not crashed. $1,600. Oh, by the way, so with rent, you will hear things from folks. I was listening to, was it Adam Taggart or George Gammon, one of those guys. I listened to him for entertainment reasons, not realistic advice. They were talking about rent, and they said, you know, what they're seeing and what the data shows is that landlords are giving away concessions, and they acted like it was a big deal. But people have been giving away rent concessions since the dawn of time. I remember when I rented my first apartment way back when. We got like a free washer and dryer or something. So rent concessions are no big deal. That happens all the time. It's not new and it's not extraordinary. But the way they present it makes you think that the world is ending with rental. But what we've seen today with the rent numbers, the world's not ending. I don't have rent going back to 2019 or 2016, but you can see the acceleration of rent around 2020. You could see that go up, and it hasn't really changed. It's gone up a little bit, but it's not skyrocketing. It's not crashing. Rent is not, at least in Spokane, Washington. I hope that helped you. That's what's going on in Spokane, Washington. Oh, here's a great question. Whoops. Dang it, sorry. Do we see large investment firms dumping inventory in any locations? This is like that last point I made about rent. So you'll hear people say that institutional investors are net sellers of properties, that they're not buying. They are net sellers. According to the latest data I saw, they have net sold in quarter 2 of 2026, about 3,500 properties, 3,500 houses. They're net sellers of 3,500 homes. Some did buy, some of those investors bought homes, some sold. And when you put the math together, they are net sellers of about 3,500 homes. However, compared to what? Well, together they own about 500,000 homes. So is 3,500 homes a lot? No. And you should know that the Road to Housing Act gave institutional investors the green light to buy homes and to bail us out if and when the housing market crashes again. Now, none of y'all have asked about the Road to Housing Act, but if you look at the shills and the headlines, you would think that we actually banned institutional investors, but we didn't. That Road to Housing Act, you should go online and read it, because it's comical when you read it. Institutional investors were banned, except in the following conditions. And in full transparency, institutional investors were banned if they own over 350 homes, single-family homes. If they go over that amount, not retroactive, like they don't have to sell their current homes. But if they already own, let's say, 1,000 homes, if they buy more homes and hold them as rentals, they can get fined a lot of money. That part is true. However, the carve out, the loophole, and the exception for these huge investors includes the following. New homes. Institutional investors can still buy new homes, as many as they want, and not get penalized. Build to rent. They can build as many homes as they want and rent them out with no penalty. They can buy from each other as much as they want with no penalty. Yeah. So an institutional investor who owns 85, like the biggest one owns 85,000 homes. I think it's Invitation Homes, owns 85,000 single family homes. If they decide, if one of the other big guys folds or says, you know, I don't want these anymore, and they sell them 50,000 homes, they can buy those with no penalty because they're buying from another big player. That's a loophole now in the bill that passed. There's two other big loopholes that you need to know about. One, distressed homes. If the home requires more than 15% in repairs of the purchase price, not the value, not the after repair value, but the purchase price. So they can buy as many as they want, meaning they can come into your neighborhood, find a home that needs a new heating system and a new roof, and buy that home with no penalty at all, and outbid you still, and pay cash for it, just like they've been doing, with no penalty, with no problem at all. And the last one may be the biggest loophole of them all, and that's foreclosures. If the house is in foreclosure, or if there's a lien against the house that's defaulted, they can buy as many foreclosures as they want as well, with no penalty. So really, the only thing that they've been banned from doing is buying a move-in ready used home that's listed at retail price that needs no repairs. That's really all they've been banned from doing. And guess what? They don't buy those anyway. What they buy are new homes. Check, they can buy those. Build to rent, they can do that. They buy from each other. They can still do that. Foreclosures, yep, check. They can buy those still. Distressed homes, yes, they can still buy distressed homes. And they don't have to sell any of their current inventory. So that Road to Housing Act and the institutional ban on investors is completely a rug pull, and it's kabuki theater. Go and read the bill yourself and you'll see it. Nobody's reading that bill. They're just reporting a headline, making you think that somehow now you don't have to compete with institutional investors. But it gets worse. This all gets worse. Because, and this is the part that I couldn't believe this when I read it in the bill. They can buy as much as they want from other investors, other large investors. We already talked about that. But what they can't do, and what the other thing they're banned from doing, is buying from small investors like me. There's like a window of 2 years where they can buy homes from a landlord that owns less than 350 homes for 2 years after the bill passed a week ago or 2 weeks ago. So they get a window where they can buy my inventory of rentals and not get penalized. But after that, they'll get penalized. So in the future, they're not going to be able to buy from a small investor, but they can buy from another big investor. Is it any wonder that Blackstone, that owns 2 or 3 of the largest institutional investors for single-family houses, is it any wonder that they are one of the biggest donors to the administration? They literally pulled the rug out from underneath small investors and individual home buyers like you, while keeping each other higher for longer. So the next time the housing market crashes and we have to invite them in like we did last time to buy up all the distressed homes, Their hand's been stamped. They have the green light and they can buy them all with no penalty. That's the fact, folks. Anyway, thanks for asking, Super Tech Boy. You can see I've studied this because I've read the thing up and down. One more zip code and I'm going to go. But no, they're not dumping homes. They may start to sell homes, but right now they're still holding their 500,000 properties. This is true. They don't sell on the MLS. Yeah, I mean, when they sell these homes, do you think you're going to get an opportunity to buy them? If it gets to that level, the financial systems and the housing market are going to be in the toilet. And another institutional investor is going to scoop them up at a discount because they can buy from each other as much as they want with no penalty. Probably the other part about this bill, though, before we continue more on this, is that the other part of the housing bill that was shocking is that originally when the bill was developed, it had a rule that they had to sell anything they bought within 7 years. So if they built a new community to rent, they had to sell those homes within 7 years. No developer or investor on earth would then build that community because they would know they had to sell it in 7 years. That doesn't make any sense. You don't know what's going to happen in 7 years. So what happened? Blackstone, Vanguard, probably half of Congress, including the President of the United States, probably went to the people writing the bill and told them, hey, look, that's not going to work. Like, this grip's going to end. We can't do that. You can't have a 7-year rule in there. So they took it out. It's completely out of the bill now. It's literally a statement saying that they can't buy single family homes. And then there's exception. Lest you think that they actually were going to ban them from competing with you, they didn't. You guys got me going on that. What stops institutional investor from just spinning up another LLC under a holding company? Yeah, I think they figured that out. Like, I mean, the rule, I think, had figured that out somehow. But that's not even an issue anymore. They don't have to do this because they don't buy from the MLS anyway. So they're just going to keep building for rent. They're going to buy from each other. They're going to buy foreclosures. They're going to buy distressed properties. The 15% of distress, the 15% in repairs, they have to qualify to buy the distressed home. 15% of the purchase price. Think about that. So you go to an auction as an institutional investor, and this is exactly what they did in 2012. They went to an auction as an institutional investor. The government invited them in because we had tons of foreclosures and tons of distressed properties in the US, hundreds of thousands of these things foreclosing all the time. They invited these huge investment firms in, like Blackstone, and they said, buy these for pennies on the dollar. Well, if I buy a home that usually would sell for 300 grand, but now it needs XYZ repairs done to it, so I can probably buy it at auction, plus it's foreclosed on, so I'm going to buy it for 200 grand. All you need is $30,000 in repairs to qualify under the Road to Housing Act bill as the investor. So now these institutional investors can come in and swoop up tons of distressed homes and foreclosures in your neighborhood and never be penalized for it. So they don't even need to do this, Super Tech Boy. Whoops. They figured out how to game the system. They figured it out. And I have a video coming out on this. And I'll probably do a live stream just about it because nobody's talking about it. And there's not one headline I've seen that actually calls out what's going on. Not one headline. In fact, when I started to analyze the housing bill, because it's tons of pages, right? And there's a lot of stuff in there that doesn't have to do with institutional investors too. Obviously, they're going to put a ton of grift in there. But when I started analyzing it and I put it through AI to kind of search for things, it argued with me because it didn't want to believe it either. And I was like, man, that doesn't make any sense based on what I've read. So then I went back and read it again and I was like, man, this is like not good. And the sad part is I've seen like all these local realtors in Ohio and throughout the US, like on Twitter and Facebook in particular, that are like cheerleading the housing bill like it's an actual good thing for homeowners and home buyers. It's going to help you. Come on, man. So they pulled the rug out from under small investors so they can't maintain their monopoly on housing. So they can maintain their monopoly. Yeah. No small investors are really talking about this either. They don't understand it. They don't know that that's in there. And I know investors that have sold, small investors that have sold to large investors. I know that. But that's going to end. That's crazy, man. Yeah. Yeah, this is exactly right. 15% of the purchase price is nothing now. Right. That's exactly right. You are exactly right. Crass in something. Is that your name? I'm bad with names. Sorry. Yeah, you're exactly correct. Like 15% is nothing. That's not distressed. Distressed is when the house needs rehab, from beginning to end. That's distressed. But 15% in repairs is nothing. So grift on. The penalties are significant enough to change behavior, but now you don't have to worry about it because you can just buy distressed homes, foreclosed homes, build to rent, buy from each other, buy new homes too. They can buy as many new homes as they want. So all that supply, the 9 months of supply we have, right? The 9 months of supply we have in the housing market on new homes right now, all that can be purchased from institutional investors. Now, you will hear people tell you, and you got to be careful here, you will hear people on YouTube tell you that the institutional investors won't come to save us. Who's going to buy these homes? Well, we don't want them to save us, but who's going to buy these homes? Well, right now the prices are too high. The math doesn't work. Interest rates don't work. But if home prices fall, and they fall enough, they'll buy them again. They're busy buying farmland now for data centers. That's what their new thing is. That's what they're doing, right? Like Blackstone is now all in on data centers, especially in Ohio. They're buying farmland left and right, developing data centers and making billions of dollars. But when that grift ends, if the housing market crashes, they're just going to buy single family homes again, just like they did the first time. When the price gets cheap enough and the deals make sense. And now their hand has been stamped in the Road to Housing Act. It's been stamped. Their hand has been stamped. They can come and go as they please. It's, frustrating. Frustrating. Yeah, please go read the bill. Go read it. I'm selling two move-in ready homes. I'll have to put the listing that they are grandfathered in. Well, yeah, again, I think if they're move-in ready, then I doubt they'd buy them anyway, right? Because they want a deal. They want a deal. It's insane to me that every time we ask our government to help us, they just end up securing more power for themselves and the billionaire donors. I don't want to live on this planet anymore. Oh, don't say that, man. Listen, I suspect it's always been this way. We just didn't know about it, right? Because we didn't have social media, you didn't have YouTube, and you're the goofy housing nerd talking about things. But like, accept this reality that no matter what you see come from the leaders, they are not here to help you. from the housing market. No one's coming to save you in the housing market. Never has been. Never going to happen. And the more the government's involved, the worse it's going to get. So know that. And if you have to operate in spite of all that, man, you got to put your head down. Realize that no one's coming to save you, and then go do it anyway, in spite of all their BS. Because no matter who goes into that White House, it's going to be the same grift. Prove me wrong. To get in front of the American public and tell people that you're going to ban institutional investors because homes are made for people, not corporations, and then the bill that comes out does the complete opposite? And it doesn't matter who's there. They're going to do the same thing. Look at what happened a few years ago when they, the people pouring into the U.S., we spent tons of money in the U.S. The economy went through the roof. Why? There were a lot of people coming in that could spend money, that were participating, and we gave them money to participate. And they say that the housing market, well, some of a good portion of the housing market values going up and prices was because of the influx of population and the need for housing. And then you've got people telling you that the population's going to decline. Do you really think they're going to let that happen? Do you think they're going to not prop it up with more people coming in? Obviously, it's just like money. They don't have enough, they're going to print more. They're not going to stand for deflation, especially in the housing market. Now, the housing market may fall, but they're going to do something wacky before it goes completely haywire. And whatever they do, guarantee it's for their benefit and their friends' benefit. Just expect it. That's why when this Road to Housing Act came out, I was like, man, if they actually ban institutional investors the way they say they're going to, it'd be amazing. But then when it actually was done, you're like, oh, right, I see. They verified the order of the universe. They are who we thought they were. Anyway, I can keep going on and on. Yeah, I mean, they are destroying the mom and pop landlords. They are. But at the same time, like, as a mom and pop landlord myself, I love it. I mean, it's the best financial decision I've ever made in my life was getting into rentals. Some of them have been great, but it's taking a lot of work and a lot of busted deals, but eventually it's worked out. So I still like it. Yeah. Yep. You're right. I don't know. By the way, it's an unrealized gain, right? So it's gain you haven't even got. If I came out and told all the gold bugs, the stackers out there, stackers kill me. I love listening to the people talking about gold and silver. It's hilarious. I like gold and silver too, but it's just funny. They're like praying for Armageddon. But if I took their gold or went to them and said, how much has your gold gone up? And they're like, I bought it at $100 an ounce. Now it's worth, $4,500. If I told them I was going to tax them on that gain, there'd be riots in the street. But we let it happen with our homes and our investment properties. That's the worst part of the taxes, property taxes, is it's unrealized. By the way, I love my school system that I'm in. I love my city services. I support them 100%, and I don't mind paying for it. I just don't like how they calculate my tax. That's all. And no, I don't think we can eliminate the cost I don't think we can eliminate fraud in the market in order to not have to have not have to pay for schools and city services. I think that is a pipe dream and delusional. At the end of the day, if humans are involved, there's going to be misspending. I accept that. I'm pretty sure that that's going to happen. I misspend, and so do you probably. Yeah, there you go. Good thing to end on. I agree. It doesn't matter what party's in office, they will always do what's best for the elites. Yeah, the top 20% is all they care about, man. They don't care about the bottom 80%. They don't. They figured that out. They're like, wait a minute. If we just cater to the top 20%, they're going to do all the spending and then the economy can keep growing. Eventually, we'll have to give you UBI. But for right now, we'll just pat you on the head, tell you we're going to ban institutional investors. Look at us, vote for us. Then, by the way, rug pull you, slip it into the bill, and you'll never know. But now you do because you follow the housing nerd. What's up, McConaughey? Good to see you, man. How's the electrical business? They can't tax gold until they get rid of cash. There's no way to know what people pay for gold when they use cash. Right, that's true. Good point. Yeah, good point. Yeah, the house, they know what they paid, right? Or know what you paid. So yeah, good point. But the principle is the same. They could do it with Bitcoin, but that's hard to track too, I suppose. What if they did it for stocks, though? Where if you didn't sell a stock, you still got taxed. Yikes. Same principle, though. Anyway. All right. Hey, if you missed, if I missed your zip code, I did a lot of them today, but if I missed your zip code, join me next week. Probably do it again. If not, I'll do it the week after. It depends on how my clients go. But thanks for joining me. Learned a lot. Sorry for the rant at the end about the housing bill, but it's important you know what's really in there. And look for a video about that soon. And I appreciate all your time. Y'all are awesome. Learned a lot. I love looking at these different markets. And I guess the takeaway is really there's not one housing market. Obviously, there's just your housing market. That's really what matters. So take care of yourself. Take care of the people around you. Pay attention to your local market where you invest, buy, or you're going to sell. And don't pay attention to the national headlines. And I will see you again. Have a great weekend, folks. Peace.